You're listening to AI PRISM from Seoul Economic Daily.
Does this week's data change your Korea weighting, your currency hedge ratio, or your assessment of country risk premium? Foreign net buying just hit 1.53 trillion won, or $1.1 billion USD, driving the hashtag KOSPI up 2.1% to 8,726. Meanwhile, the Bank of Japan raised its policy rate to 1.0%, and Korea just secured a strategic energy deal with the UAE.
Yeah, those are some really massive data points to digest.
It's Wednesday, June 17. Here's why global investors are paying attention to Korea today.
Right, so we really need to unpack that 8,726 tag KOSPI close first.
Exactly, because, foreign investors net bought 1.53 trillion won, or $1.1 billion USD over just 3 sessions. But my main analytical question is, are we finally seeing the historical Korea discount truly resolving, or is this data just masking extreme single-stock concentration risk?
I mean, it is absolutely masking concentration risk, because SK Group's market capitalization just crossed 2,000 trillion won, or 1.43 trillion USD. That single conglomerate now represents 26.2% of the entire equity market.
Oh, wow, 26.2% is just huge.
Yeah, and within that, SK Hynix closed at 2,382,001, or 1,703 USD, which is like 84% of SK Group's total value.
Wait, so the hashtag KOSPI is basically just acting as a proxy for global AI memory demand?
Pretty much, yeah. Which explains Daeshin Securities raising its hashtag KOSPI target to 11,500 based on semiconductor price to earnings normalizations. They expect that PE ratio to expand from 5.43 times to 8.8 times.
Okay, so investors are finally paying a premium for Korean chip makers, right?
Right. But then, we have to transition directly to the macro and geopolitical factors threatening unhedged currency positions.
Yeah, because the U.S.-Iran ceasefire MOU resulted in less than a 2 basis point move in U.S. 10-year yield, sitting stubbornly at 4.47%. So how does this restrictive global rate environment actually impact the Korean won?
Well, the Bank of Japan just raised rates to 1.0%, with Nomura projecting a 1.5% terminal rate, which keeps the yen carry trade structurally intact.
I mean, that makes total sense when Nvidia successfully issues 25 billion USD in corporate bonds against 850 billion USD in demand.
Exactly. U.S. yields are just a magnet right now. And this connects to the Peterson Institute warning regarding politically motivated Fed swap lines.
Wait, so a politically motivated Fed swap line could penalize countries without permanent agreements?
Yeah, and Korea lacks a permanent Fed swap line while simultaneously mobilizing 200 billion USD for U.S.-bound investments.
Oh, so they need dollars desperately, which obviously puts huge pressure
on the one, right? Which
Yeah.
frames that UAE energy and nuclear deal as a completely necessary structural hedge right now.
Okay, so taking all this into account, what is the bottom line for allocators here?
The 1.53 trillion won, or 1.1 billion USD, in foreign net buying demonstrates that current data supports increasing Korea allocations. However, Korea's massive outbound capital commitments combined with its lack of a permanent Fed swap line make Korean won volatility the dominant risk factor for unhedged positions right now. Allocators must therefore carefully balance this concentrated AI equity upside against the geopolitical realities threatening currency stability.
As you update your models, consider this final thought. If global defense spending is truly hitting Cold War peaks again, is the underlying Korea discount ultimately just a matter of its geography?
Yeah, that is definitely something to think about.
That's today's AI PRISM, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Wan Ifrey award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.